And our first guest joins us via satellite from Fort Lauderdale, Florida. Mr. John Bannister is the president of First Global Financial Corporation. FGBF is the stock symbol. John, welcome to the program.
Thank you so much. Kind of you to ask.
Well, now, John, First Global Financial Corporation describes itself as a company whose business plan is to acquire substantial property portfolios in Europe and the U.S. in partnership with established property developers. Can you give us a general overview of the company, please?
Absolutely. We've identified portfolios that meet our investment and acquisitional criteria. We've been able to contract those properties under option, and because of the fact that First Global is able to access the financial markets that the property portfolio owners can't, we've been able to make strategic alliances with them so that we can achieve a profitable outcome for both parties, an equitable outcome. We assist the developers because they are simply unable to either dispose or complete and dispose because of the prevailing financial conditions. Our business plan is to identify good quality, high yield properties and to form, as I say, those strategic alliances for acquisition.
Well, John, it was kind of interesting. The company indicated it selected a range of properties like hotels, leisure properties, commercial, retail, and office space. Tell us about that.
We have an extensive range of properties under consideration. The tourism and leisure sites are in well-established or growing tourism locations geographically. The office and retail developments are in established locations with good long-term tenancies in the major cities such as Dublin, London, etc. We are constrained somewhat by confidentiality clauses at this moment because we're in the process of completing our financial arrangements with these parties, but we will be making full disclosures in the very near future, and I can assure you that some of the properties could be described as trophy, and some of them could certainly be described as substantial.
Well, one of those properties I certainly would classify as trophy is known as Copacabana. It's on the island nation of the Republic of Cape Verde, which of course is off the coast of Africa. Tell us about that project.
Very good project. It's on a beachfront. It's regarded as one of the most beautiful bays in the world. It's a very good composition of retail, commercial, with restaurants, etc., and obviously with accommodation, apartments, and penthouses. We're very excited about this development, and we think that it will be sure to be a very, very popular location, and should do very well for us.
Again, First Global Financial Corporation, FGBF is the stock symbol. Now, John, I know the company has relationships in Ireland. What can you tell us about your relationships and your plans in Ireland?
Absolutely. We have very important relationships with our shareholders in Ireland. We have a very good shareholder base in Ireland. Also in John Hartnett, our Irish and European Managing Director, who is an Irishman based in Ireland. He has extensive experience of the banking sector in the Republic and also the political considerations. We are looking to develop those relationships over the coming months, and of course we're waiting to see the outcome of the impending Irish general election and to see how that will impact upon the government agencies such as NAMA.
Well, John, can you tell us a little bit about the financial markets in Ireland and how they might have led to the opportunities that the company is saying it's now poised to take advantage of?
Certain journalists, I think, opine that if the property market collapse in the United Kingdom and Europe could be described as the sinking of the Titanic, then the property situation in the Republic of Ireland was akin to the Hindenburg disaster. That's certainly one aspect of the equation. The other side is, of course, that Ireland is, rather regards the United States as a major trading partner. It still has, over 220 companies, for example, that employ something in the region of 87,000 United States citizens. The Republic was holding at the last count in excess of 1.2 trillion of American investment. So the government, having made its political decisions and having created the National Asset Management Agency, for example, under the aegis of the Treasury, everybody knows that the banking situation in Ireland is very similar, very well known, not a unique situation, and that NAMA has mopped up, to use an expression, something in the region of in excess of 90 billion of the bank's loans and, of course, concomitantly its properties. The change that's about to happen in the political situation, the new government, could very well impact significantly on NAMA's business plan, which may indeed result in significant disposals. So we have been positioned to take advantage of that, and we'll be looking forward and we'll be monitoring very closely the developments as they take place over the next few weeks.
Well, of course, now, John, the world is beginning to pull out of the economic downturn. Does the company feel its current and pending acquisitions are ready for a growth in value?
I think the answer to that is yes, overall, but unquestionably, there must be a recovery that takes in good part the present depreciated or impacted values. My own opinion is that there are certainly other considerations to be made now, and the investment community, from my latest research, is looking for other considerations. Historically, properties always recover. These things are cyclical. You know, the pundits describe it as a boom or bust. The recovery will take place. As to when, I think is open certainly to significant debate. It could be within the next 3 years, 5, 7. The considerations we have made are that we are acquiring them at, obviously, at good discounted property valuations, and that with adequate and good management and proper maintenance, they will accrue and will reflect adequately the bounce back or the increase in the markets and the general financial economies as we go on.
Well, John, when the company is evaluating a potential property acquisition, what is it you're exactly looking for?
I think we have to be mindful of the investment criteria that the institutional investors have these days, and what they want, and certainly this is a consensus, they want to see that the properties are adequately and properly managed and supervised and maintained. We look for properties that are not going to be a major drain on the company's resources in terms of refurbishments. We're not really interested in that sort of property. We want something that is relatively new. We also look very carefully at the geographical locations, the composition of the tenancies. If we are going to consider, we look for audited financials in terms of the past performance on the units, the location, etc. And lastly, but certainly not least importantly, you look to see that the employment and the creation opportunities for employment are in place. We like to maintain and make a proper contribution, because at the end of the day, it's the people that make the properties work, and this is very significant to us.
Well, John, what can we expect to hear from the company over the balance of 2011?
We're going to be able to see some very interesting developments. We will be in a position shortly to make some important announcements regarding the detail on the property portfolios. We are looking to announce our strategic partnerships with the institutional investors that we're presently in negotiation with. We've got some potential announcements to make regarding new memberships to the board, which I think will prove very, very interesting for the investment community. We will be looking to take the fullest advantage and participate fully in the changes that we are convinced are going to take place in the Republic of Ireland, thanks to the general election and the new governments that will take place, the new government that will be in office. And all in all, I think we are going to be maintaining a position of confidence. Our expressions of confidence, I think, will match a growing expectation, I think, from most people now that we've seen the worst and that better times are on their way, and that the investment communities are now considering how they might properly participate where formerly they have been exercising, shall we say, significant cautions.
Well, very well said. Now, John, why is this a good time right now for folks to take a closer look at First Global Financial Corporation?
Firstly, I'd say that our share price is adequate. It has capacity for improvement, and I think we will certainly do our very best to do that. We are poised and have spent a great deal of time and effort to position ourselves to bring maximum shareholder value into the corporation. We are going to be very mindful, very careful of the economic realities that we face now. We are also very keen indeed to develop the existing relationships that we have. And I think I can say, and I do say confidently, that we will match the expectations of our investors, and we will certainly do our very, very best to exceed them in the coming year. All in all, I think it's very important to remember that property is more than just bricks and mortar, glass and steel. It's a reflection of people's aspirations. It is a benchmark for how the economy grows, and of course it's a vital component in that growth and recovery. We intend to play our part.
First Global Financial Corporation, FGBF is their stock symbol. John, we are going to be initiating coverage of the company beginning this week, of course. Be watching you very closely over the next several weeks. Looking forward to more updates during that period of time. Thanks so much for joining us on the program.
It's been a great pleasure. Thank you so much for inviting us.